Welcome back to Everything Money. In this video, you will learn about Smith & Wesson and the stock. This is a firearms company, an incredibly requested video from our community. And this stock last Friday fell 30% in one day. We'll talk about this irrational fall, what happened, and has it hit our sweet spot in terms of buying. We'll show you the financials using our Everything Money software, and we'll use our stock analyzer tool to predict if this is now a buy for us value investors. If you wanted to make money on this enormous fall, you could have joined Mo, and we will at the end of this video. He'll show you all the trends and charts for trading Smith & Wesson. But first, why should you watch this video? I bring your questions about this gun company to a couple guys who own and operate over $100 million in real estate, multiple businesses, and stocks, and they'll help walk us through the process of investing in a company like Smith & Wesson and what we should do moving forward with a stock that jumps during elections, Paul. You know this, jumps up and down. I give you Paul Gabriel.
Thank you very much, Seth. Everyone, please follow our Instagram account, Everything Money Investing, and follow our 3 personal accounts. I'm not going to get into why. So Smith & Wesson, guns are kind of a scandalous thing, right?
Yes.
They went down 30% the other day.
Crazy.
I own Smith & Wesson before it went down 30%.
Were you sad?
No, I didn't care. So Smith & Wesson dropped big time for what I understand, one major reason. They had a lot of inventory built up. So previously, so many people were buying guns that they had a lack of inventory. So what they do? They built up a lot of inventory. And that inventory number scared a lot of investors. They fell 30%. Now, is that a reasonable response? I don't know. My take is guns they don't exactly have a shelf life, right? Like we can probably still shoot guns from the Revolutionary War. There's no shelf life to a gun. Mm-hmm. You build a gun, it's going to sit on the shelf until you sell it. So inventory numbers don't bother me as much for Smith & Wesson, right? Another thing, this is the FBI background checks for weapons.
Go on. From
2005 to last year. As you can see, last year was a massive increase of 40 million. But as you can see, guys, like we talk about guns, but look how popular it's still continuing to become. It's still a growing business. Now, it's a growing business with a lot of, not scandal, but what is it? It's one of the sin stocks, right? Yeah. Or guns,
political
cigarettes.
Turmoil.
It's a lot of negative attention.
Yes, correct. Now, the Kyle Rittenhouse verdict, they're wondering if it's going to increase the number of people applying for weapons. They said December has already, after a few months of decreases in FBI background checks, December has seen an increase, or November saw an increase. So this could lead to good Smith & Wesson numbers. Now, of course, like everything, I'm going to look at the financials of the company, and this is why I get excited about the company. So let's go to our Everything Money exclusive software, 8 Pillars tool. Type in SWBI. All right, guys, look at this chart first off.
Look at that.
I don't know what caused the stock to go from $20 to $35 in a matter of a week or two. But now it's down to $16 or something. Okay. So it's an $800 million company. All right. The 5-year PE is our first pillar. We want it to be less than 22.5. It's 10. Last year's PE is 2.9.
Ooh.
Don't put too much focus on that, and I'll show you why in our income statement. That is really good. Pillar number 2, we want the 5-year return on invested capital greater than 9%. It is 38.9%.
Oh my Lord.
So yes, they do a phenomenal job of making money on their investor capital, which is through debt and equity.
I was in the car with my 11-year-old on Friday when this collapsed, and he's like, "Dad, PE of 3." I was like, "Oh my God, how?"
Did he really say that?
Yeah, it's like, he's looking it up on the app. It's incredible.
That's adorable.
Keep going, Paul.
All right, they have a dividend. They just started issuing a dividend last year, I believe, 1.5%. It pays $12 million a year. Their 5-year average free cash flow is $120 million. That eats up 10% of their 5-year average free cash flow. So they can really afford this dividend. All right, so it's a market-beating dividend. It only eats up $12 million of their free cash flow. Pillar number 3, let's go to the income statement of our exclusive software.
Yeah, this is revenue growth over the past 5 years.
Correct. $825 million to $1.1 billion. Check mark there. We did see drops. We did see a big drop here. But if you look in the last 10 years, 456, 622, 587, 567, 782, all the way to $1.1 billion. So it's over doubled its revenue in the last 10 years, about 7% increase a year. Now, guys, this next pillar is our net income. It's pillar number 4. Here's what I wanted to show you. We scroll down a little bit. Look at this massive jump in net income.
What is the number? 280?
$280 million last year. So look at the company over the last 10 years. 33, 87, 77, 50, 115, 90, 39, negative 10, 280. So you have to sit there and say, recently it's been good because of the last year. I don't think that's consistent. So I'm really going to focus on a long-term average of earnings yield, profit margin, and free cash flow yield. And we'll get to that in the stock analyzer tool later in the video. But this company has inconsistent earnings, which I don't like. However, if we can figure out a way to look at a long-term average, it could work out very well. Okay, pillar number 5.
Yep, shares outstanding.
Now, this is where their big thing is. They did a $50 million buyback last year. Was it last year? What did they do? They did a $50 million. Mo, what did I send you in the email?
Let me pull it up real quick.
I'm going to pull it up also because their buybacks have been a big thing. They are definitely buying back a lot of shares. So, they authorized another $50 million, which is on top of the $110 million buyback they already did. So what we're looking for here is we're looking for them to decrease their shares, especially when the company is selling so cheap. We want them buying their shares back. They're buying cheaper shares. Now, this is why their EPS, earnings per share, were so good this last quarter, because they bought back over 7 million shares in the last quarter. So if you take that out, their earnings only increased by 3.6% versus the 30 or 40% it went up in the last quarter. All right. So we go back to 5 years ago, 53.9 million shares. Last year, 48.4. Check mark there. So they're buying back shares. They are increasing your ownership of the company every single year, especially in a stock that I think is selling for a cheap amount of money.
Yeah, pillar number 6 involves their debt. Paul, tell us about it.
Okay, so guys, what we do is we go to our main page of our exclusive software. We take the 5-year average free cash flow of $120 million. We multiply it by 5, $600 million. We want their total long-term liabilities to be under $600 million. So we go to the balance sheet of our exclusive software. We scroll to the bottom. You ready for this one, Sethi?
Go ahead.
$54 million.
Oh, my goodness. A tenth?
Yeah.
Why bother?
Almost 1/12. So they have like very little debt.
Wow.
In fact, if you factor in, come here, look at this. Total current assets
Go on.
is $318 million. Total liabilities is $192. So they can take all their cash and inventory, liquidate it all, pay off all the company's debts, and still have money left over. So when you're paying at $810 million for this company, you're really paying like $700 million for the company. All right. So this is a very good, healthy financial company. It's going to be very difficult for them to go under when they have this much cash and inventory versus their debt levels.
How is the free cash flow, Paul? Pillar number 7.
So this is what matters. We go to the cash flow statement in our exclusive software. We scroll down. Free cash flow, guys, is cash from operations less your capital expenditures. You can do 5 things with that. You can buy back shares, pay dividends, pay down debt, make acquisitions, and invest back in yourself. Okay? So cash from operations less your capital expenditures, and your Uncle Paul adds the extra line here to make the math easy for you. And 5 years ago, it was $24 million. Last year was $318 million. That's a check mark. Okay?
Yeah.
Now, again, it's all over the place here, but we're going to go through a long-term average. And our final metric is we take the 5-year average free cash flow, we multiply it by 20 to give us a market cap that we want to start looking at. Does this mean we pay this exact price? No. But what's 20 times 120 million? 2.4 billion.
Come on.
And the market cap is 800 million.
700 if you count the money in the bank.
Correct. So it's selling for 1/3 our metric. It's selling for basically 6 times, 7 times.
Have we ever seen something this low?
Oh, yeah, we have, but it's been ridiculous. Now, I do believe this is a very controversial stock right now, probably why it's selling so cheap. The inventory issue doesn't bother me as much because I'm like, okay, well, yeah, they already told everybody that they're paring back their production by 27% to make up for the inventory increase.
I was envisioning there'd be supply chain issues where they wouldn't have the inventory. They have too much?
Yeah, they have too much inventory.
Okay.
This is a company that used to only do revolvers, and now they're doing rifles, revolvers, all these accessories. I mean, they're a very diverse company. Smith & Wesson's a very well-known. I'm not even a gun guy, and I know Smith & Wesson. You know Smith & Wesson.
Yeah, remember I told you on that conference call for Q3, they're developing like little Smith & Wesson kiosks where you can get like your hands inside of this like kind of like glass booth, and you can handle the guns without getting an employee. You can almost,
Oh, wow.
yeah. So like they're not loaded, but you can try your guns out without getting somebody down and yada yada. It's a pretty interesting concept. You know, they're trying to increase sales and get more guns in more people's hands.
So I look at this, and let's go to our 8 pillars tab. It's an 8-pillar stock all day long. I mean, everything here is great. So you have to decide for yourself. The only issue with Smith & Wesson I saw was the inconsistent profit and free cash flow. So again, taking a long-term average. Mo, what do you think?
Can we go back to the inconsistent cash flow and see when the inconsistencies were there?
The inconsistency started about 5 years ago.
Okay. That's interesting. Can we go to 10-year and look?
Yeah, it's right there. It's 10 years.
Go back further.
Go back. Well, they were a really small company in the last decade, in the previous decade.
They're still a well-known brand, though.
Pardon me?
How was it back then? I can't see from here.
2011 was 318 million, -2, 53, -7, -13, -2.
So they've always kind of been
it's been very inconsistent.
All right, well.
So, yeah.
Yeah.
Let's go to our stock analyzer tool. So, guys, this is a really, really important part of our website. It's become the most popular thing we've basically done. It allows you to input every investment as the present value of all future cash flows and earnings, essentially. So it allows us, we don't know the future, it allows us to make our assumptions, to tell us what those future cash flows would be based on our assumptions. And it'll tell us, hey, based on your assumptions, here's what you should pay. So we start with our analysis. I think Smith & Wesson's going to be here a while, right?
Yeah, they're a staple brand.
Yes.
You know, Paul, it's funny. We use this tool, and when you say that, I lock in the ideas. We don't know the future, but let's use some of the past and some of the numbers to predict it. Have you noticed when people are just like buying stocks and hoping they go up, they sort of say, you know, we don't know the future, so I'm just going to buy and hope. Like that. It's also like what they.
It's their justification for saying, well, we don't know, so make it work. It's like, you're right. But that's like saying you go to the blackjack table and say, hey, I have 4 showing, the dealer has 7. We don't really know what the dealer has, so I'm just going to go ahead and stay. Or the dealer's showing a 10. I don't know what they have, so I'm going to keep hitting until I get to 21. No, you still play the probabilities, right? Okay, so usually I deflect to Mo here. I'm trying to go very conservative. Mo.
What about 579?
Oh, I went even lower.
Oh, really?
2,
for revenue
3,
growth?
4.
Why?
Why? Because we had a big surge last year in gun buying, so I think that's going to decrease. And I'm going to assume that regulations happen and they're only able to increase their price based on cost of living increases.
Okay, here's my counter argument. We had a big surge last year. There are surges in a lot of random years.
Just hear me out.
What about another surge?
I want to show you how cheap the stock is my point.
Okay.
So we will do Mo's assumptions here, but let's go to 2, 3, 4. Profit margin. I did 9.5, 10, and 10.5.
That's good.
Free cash flow, 10, 11, 12. PE, 8, 10, 12. 8, 10, 12 for free cash flow, and 12.5%. And the reason I did 8, 10, 12 is, this is such a risky company. They could get deregulated, they could get regulated, and all these things are going to happen. It's going to go to nothing, et cetera, et cetera. Analyze button. This is why I want to do that, Mo. Green all the way around. We have basically $20 to $30 per share as our price.
So buying this stock today, even with these elevated assumptions, will give us a 12.5%.
Not elevated assumptions, low assumptions.
Oh, low assumptions will give
Very
us a
depressed
12.5% return.
Actually, it'll give us higher. If we assume the middle level, which I thought was a pretty reasonable level, you basically can buy it at $24 a share and still make 12.5%. But today you can buy it for $16 a share. So it's basically going to make you, I can assume probably, let's see what 20% does here. Yeah, it's basically 20% return on your money if you believe my middle assumptions above, which is 3% revenue growth, 10% profit margin, 11% free cash flow, and a 10 PE. That's incredible. So to go back to Mo's comment, now Mo, you're saying 5, 6, 7.
For revenue growth?
Yeah.
Oh, I said 579.
579. If you believe Mo's assumptions, holy cow. You can pay between. This is the definition of
A value
margin of
stock?
safety.
Oh, a margin of safety.
Because you're looking at a company, which we already factored in margin of safety at 12.5%. So let's say the market's 10%. Really, it makes the stock a $28 stock and you're buying it for 16, based on a market average of 10%. That's the point of margin of safety. Now, the question becomes, what's the story behind Smith & Wesson? Is there something scary behind it? I don't know. But that's your goal here, is to sit there and do your due diligence and say, is this company going away? And if not, is the revenue going to be increasing or decreasing over the next 10 years? And will profit margins and free cash flow margins stay the same? If you can believe all that, you are going to buy the stock all day today.
This looks like as something Manish Pabrai would say is heads I win, tails I don't lose much.
I believe that for the stock. That is my opinion of the stock. I believe buying it at $16, it's heads I win, tails I don't lose. That's it. Or I don't lose much. Mm-hmm. They're buying back a lot of shares. If they use all their free cash flow to buy shares, I love it. Just do that. Use all your free cash flow to buy back shares. I'm cool with that. All your free cash flow to buy back shares. I'm selling puts on this thing at $15 also. I'm increasing my position in this company. That's my opinion. Don't do it because I'm doing that. What we have done here is we created the software because people wanted to be able to, our users wanted to be able to analyze companies without waiting for me to discuss them on the show. So we created the software. You get everything you see here. You get it all on your mobile phone, literally everything on your mobile phone. So you're on the go, you can do it. You get 30 years of financial data. You get access to Seth Moe and I. You get all the 8-pillar analysis, the stock analyzer tool. You even get everything on the main page that's coming soon, which is things like the real estate analyzer tool, stock screeners, watch charts, chart trading. Everything here will be coming to you. You get retirement calculator. You get the 8-pillar portfolio. You get exclusive daily content. We post 2 or 3 videos a day only for the people who subscribe to our software. But most importantly, you get access to over 6,000 people in a very organized chat to discuss your investment ideas, because Seth always says that he felt alone in how he looked at investments. And a lot of people around the world, if you're around people, you don't necessarily know who's talking these ideas. It allows you to go discuss these ideas. You can go discuss any stock we've discussed today in a group to get everybody's ideas. This is all available for only 90 cents per day. 90 cents per day, you get all of this. It's less than a cup of coffee. If you can increase your returns or decrease your losses by 1 or 2% a year, it could lead to hundreds of thousands, if not millions of dollars. 90 cents a day, 2 ways to sign up. Everythingmoney.com or Patreon. The benefit of directly going to everythingmoney.com is we're not big enough yet to charge sales tax, so you'll save that for quite a while. So 90 cents a day, guys.
If you're looking to trade Smith & Wesson at a quicker pace, day trade, swing trade, momentum, Mo, tell them what's going on there with the charts. If these seem confusing to you folks, stick with it, because this is definitely a language you can pick up. Go ahead, Mo.
So this is zoomed back to July of 2020, and if we just draw a straight line across here, with the exception of this little blip that popped up, we're pretty much in that same area. So to me, that's saying, all right, we're at the lower end of that area that I'm just talking about, and there is a gap to fill right here. So right now, if I'm you, I'm taking $17.88, buying a tracker share. That means one share that you're gonna see in your brokerage portfolio every single day. So if you have a watch list of 30 stocks, there's a chance that you miss trades in there because there's so many in there. If you have a tracker share for $17.88, you can go in there and you see it every single day. Worst case scenario, this company goes out of business, you lose $17.88. Wait for this to move into the sweet spot, fill this gap, come up to this consolidation area around $24, and you'll have a very nice trade for a long-term perspective. If you want to do a swing trade, the benefit of this right now is you're below all 4 major moving averages. So it's going to take a lot for this thing to get back up to those moving averages. So what you can do is let the stochastic swing up and down in here. And as that's happening, it's just going to be moving below the moving averages. The benefit of that is you don't have any resistance points to deal with except for the ones that are going to be drawn in themselves. You don't have to worry about the moving averages. Now, from a day trading perspective, this is not a great stock to day trade, but on days where you get big moves due to news, you could have gone in and shorted this thing. You were below 20% down here. You had excellent selling volume coming in, and you had really good engulfing candlesticks. So there's different ways. When you have polarizing stocks like this, take advantage of the news. When you get moves like 24%, go and take advantage of that. Try to grab a little bit of it. So if you want to come and learn these rules, come and join me in the Bid and Ask Nation. You get access to my Trading 101 series, which gives you all of the rules that you need to be successful. The Employed Trader series, which is 6 stocks that I go through every single day and teach you about. Long, short, we swing trade them, we go long on them, everything. Exclusive monthly seminars that I do once a month on Saturdays in the Bid and Ask community of 950 plus people. Come and join us.
That is our take on Smith & Wesson. We'll keep you updated, and an incredible 8-pillar stock with a low PE. Amazing. Thanks for watching. Final thumbs up. Join the community. You're going to love the software. See you soon.